This TFMR podcast is brought to you by your friends at JM Bullion. Visit jmbullion.com for all your gold and silver bullion needs. Welcome back to your TF Metals Report podcast highlights for the week of January the 10th, 2022, the second business week of the year. We got off to a rather tough start last week, and we knew this week was going to be busy and volatile with all sorts of important economic data, including the latest readings on producer and consumer inflation in the U.S. If we could navigate this week with a green candle, we figured that'd be pretty good. Would we get there? Well, we began the week discussing that back on Monday the 10th. We don't just talk about the precious metals every single day. We got to talk about all the other factors that move the precious metals. One of those factors is interest rates. The 2-year note yield in the U.S. has surged over the last couple of months, reflecting a pending rise in the Fed funds rate from the Federal Reserve. It's not the most important indicator in the world, but it was something we discussed on Monday, January the 10th. So again, look at this move in the 2-year note. 90 basis points now from what was 30 basis points 4 months ago. Okay, the 2-year note's pricing in all these rate hikes, I suppose. You can see that the 1% level going back to 2016 was rather important level. Once it got above there, went all the way up, again, late 2018 to 275. This is a monthly chart. So in November of 2018 is when we hit that peak, and when all those 8-figure economists were talking about 4 more rate hikes in 2019. And you can see the opposite. What happened, rates fell all the way through 2019 and then absolutely collapsed with COVID. So we'll see what happens when the 2-year note gets to 1%. Look at that whole back half of 2016. There's 7, 8 candles? Maybe where it couldn't get above 1, and once it did, it was off the races. So we'll see. We'll continue to watch that. As someone who's been in the financial services and securities industries pretty much his whole life, one of the things that absolutely drives me crazy in 2022 is the abundance, the overwhelming influence of HFT trading and computer algorithms. Fundamentals don't matter anymore. The computers see a market move a certain way, and then they react in other markets just simply based on what happened. You can see it every day, how gold might track the dollar index tick for tick, or maybe some days it's the rate on the 10-year note. Well, you can actually boil this down even further. One of the things that drives us crazy at TF Metals Report is the long-standing correlation and relationship between the gold miner ETF, major producing gold miner ETF, I should say, the GLD, with silver, COMEX silver prices. Here's a chart to show you just how dramatic it is. Both of those in candlesticks. You can see on this chart the correlation is about 99%. Why? You tell me. But it was one of the things we discussed on Tuesday, the 11th. And then, of course, your final chart of the day is the GDX and silver combined. So rather than do this with the GDX in candles and silver in a blue line, I thought I'd do them both in candles so that you can really see the 99% correlation between the gold mining shares, producing gold mining shares, the GDX ETF, and silver, COMEX digital silver. Why should there be a 99% correlation? I mean, look at this chart. Talk about one universal chart. This is algo hell. Now, who runs the algo? Who runs the monolith, right, that moves the shares in mass? Remember the gold royalties that move the same as the gold producers, which move the same as the gold juniors, which move the same as the silver royalties. Oh, remember that? I just showed that chart again yesterday. This is algo hell, man. But in this case, who set these algos up? Because again, there's I could see we'd have some correlation between producing gold miners and the price of silver. Okay, some. But this? Wednesday brought the latest update on consumer price inflation in the U.S. Gold price surged, but that also is tracking another surge in open interest on the COMEX and the use of the trade at settlement system to put on spread trades and potentially manipulate price. That's something we talk about in our manipulation analysis at TF Metals Report, really almost a daily basis. So that was on our minds on Wednesday the 12th, and it was part of what we discussed in that day's podcast. So let's start with one from this morning's post so that you can graphically see what happened back in November. Again, November the 3rd, or the 4th, I guess it was when we had that blowout CPI report. And price blew through its 50-day moving average. See that candle? And then rallied from there over the next 5 days from about 1790 all the way up to 1870. All the while, the banks were adding all of those shorts. They capped price up there near the whatever, I can't even remember where that was, 200-day moving average. Maybe I have to look at the other chart. Anyway, and then, of course, rolled it over, massive red candles, blasted it all the way back down. So where would we go this time? Well, banks added 20,300 contracts into open interest yesterday on the day we moved through the 50-day moving average. I don't know. 1850 would seem a logical target. Maybe a little bit past that, as I'll show you when we get to the daily chart in a minute. But again, I want to make sure you paid attention to that chart that I originally posted this morning. While gold has always been the focus of TF Metals Report, sound money, acquisition of physical metal to protect you against the coming madness and the end of the great Keynesian experiment, we also talk a lot about a silver at TF Metals Report as well. We follow that chart very closely, and on Thursday the 13th, we updated it. We noted again that price was being capped and struggling at its 50-day moving average. That'll be an important level to watch as we head into the rest of this month. In silver, with its 50-day, the chart still looks terrible. Nothing attractive about it at all. But that's, of course, to be expected after the year we've had. But look at just the last 6 months. After the BLSBS on September 3rd, that big green candle goes up and taps the 50-day when it was up near 25. And then we get to September the 7th after a 3-day weekend, smash, all the way through the month, all the way down to 2150, 350 down. Rallies in October, fiddles with the 50-day, finally breaks above, comes back down, tests support, and goes all the way back up to 2550. Comes down in November, tries to hold its support, breaks down again, goes all the way to 2150 again. And then look at just the last couple of weeks. Look at that, late December, beginning of the year, again, brushing up against the 50-day moving average for getting smashed backward last week. And now here we are again, 2 days in a row. We have not closed above the 50-day moving average since all the way back here about November the 21st. That's a long time. And when we did initially close above the 50-day back there in the middle of October the 10th or whatever that is, look how that was a precursor of a $2 move up to 25.50. So tomorrow, your final chart of today is this silver chart of the March contract, the current front month. That 50-day moving average, 23.24. Like I said, today's high, 23.31. You can see it on the chart. Briefly got above there and then got driven backward. We're going to watch this really closely tomorrow. I mean, if we were to close above 23.50, with the highest close since November, that'd be fantastic. But even that, if we just simply close above the 50-day, it'd be the first that we've done that, like I said, for 2 months. So, big day tomorrow. And on Friday, January the 14th, the latest data on the U.S. economy was all pretty dismal, pointing towards stagflation, with retail sales falling, industrial production falling, but inflation expectations growing. Now, you'd have thought that'd be good for gold, but the dollar index bounced from that 94.65 level we'd been watching all week, and that took some of the fun out of the gold market. Nonetheless, gold finished up the week $19, and silver was up 50 cents. So we navigated what was a very volatile and important week, and we actually put in positive moves, also coming off a lousy first week of the year. So this was a good week, and we're set up for next week. Again, if you notice the weekly chart of COMEX Gold, it looks pretty good. Looks like it's trying to break out again. It's once again holding above its 50-week moving average. You can look at this chart and see how important that is. So we'll see what comes next. Next week, of course, a quiet week ahead of the next FOMC meeting, and a pretty quiet week in terms of data, too. So we'll watch things closely and see where we go from here. Come back next weekend for another edition of the TF Metals Report podcast highlights.